if you're an insto investor in the space and you sort of catch wind that they're going to do like a decent raise, 100 million
For SPUT.
for SPUT, you know it's on. Like it's so on when you catch wind of this. You know the equities are just going to rip. You dogs.
Uranium, JD. Uranium, it just had its biggest one-day spike in years. And it all started with SPUT lighting the fuse. A surprise $100 million raise for the financial reactor has been upsized to $200 million, and it sent the uranium equities flying. We dive into this. Plus, copper juniors get even hotter. The takeover of New World Resources is getting competitive. Please be a bidding war. And should gold companies hoard the gold or generate cash? We're going to share some thoughts on this. Let's dive in, JD. What the hell is going on in the uranium market?
Mate, let's rip in. We've got some awesome stuff to talk about. So uranium first up, I'm sure that's what a lot of people are keen to hear. So sort of seeing news come out over late Sunday and then into early this week, all centered around SPUT, the mighty SPUT, Sprott Physical Uranium Trust. So that is the unit that just holds 66 million pounds plus of uranium. They get cash, they buy more. So like you said, 100 million US raising, upsized to 200. And we're going to talk about that dynamic a bit. Also, very interesting, and you mentioned the word sort of surprise raising there. It was right because they raised money, a bit over $25 million just in May. So a bit going on there. And obviously the stocks just rocketed through Monday, Tuesday, like Deep Yellow on one day was up 20% plus, Boss 16 and Paladin about 15%. All in on the Monday that was. And then if you look at the Sprott Uranium Miners ETF, so the basket of all these names that trades in the North American markets, that was up about 7%. So SPUT itself has settled a bit. It jumped up from kind of 17-ish to about $18 and then has come back down to the low 17s. But yeah, it's been super volatile the last few months. We've had that sort of narrative of, or maybe SPUT has to sell some pounds to finance itself. That's sort of washed away, and it's just turned like that, right?
It's turned probably because of some opportunism from the financial sector, JD. Let's start with SPUT itself, because this is the trust or the vehicle. It's a Sprott unit trust, which is effectively accumulating pounds of uranium.
Yeah.
Typically, this vehicle can only add more pounds when it trades above NAV, which it hasn't done in quite some time. However, this placement and the last one have been able to get over the line.
Yeah, I mean, if you look at the chart, right, and you can see it kind of flattens off in terms of how many pounds they've added to their total inventories, if you like. So that dynamic with trading at a discount, trading to premium kind of guides its buying action. So NAV prior to this raise, like if we look at Friday's close on a per share basis, was $17.04. They last traded at $16.98, so really close. Like we're talking, you know, a couple decimals of a percent, and it had been closer to 10% not too long ago. So it had been a while since they'd got that close, and we knew the company had been itching to do a raise, although
The company?
well,
Sprott?
it is a company of sorts, right? The management team of the trust.
Yeah.
And
Sprott Inc., who collects fees, a lot of fees on this vehicle.
yeah, exactly. So they needed to, back in May, like quell the sort of fears in the market that they were going to sell pounds, because that had been pressing the market down, been a bit of an overhang, if you like. And we thought that thirst, if you like, had been quenched by doing this May raising, $25 million. It meant they had over 30, which would, at kind of current rates, fund it for a bit over a year. And that was done pretty impressively, because that was done at a 9% premium. So they were trading at a steep discount to NAV, and you can't raise at a discount because it's dilutive and yada, yada, yada. So they don't.
I think it's explicitly like a rule of this trust is, you know, there can be no buying of pounds unless it trades above NAV. So this money had to come into that vehicle above NAV, I believe.
And they got it done, which was, it was well done on their part. It relax the market, if you like. We didn't see the same kick up that we saw today, which is kind of interesting. But it meant they could finance themselves for a while, and they wouldn't have to sell these pounds. And I mean, in the
Well, think of the rationale, right? Why are hedge funds or whatever tipping in to buy SPUT above NAV doesn't quite make a lot of sense when there's a fair bit of carrying costs associated with holding SPUT. Like all of the fees that go out to SPUT. So why are you willing to pay above NAV? What's your actual position here?
Mm.
Is actually in the U equities, which had high short interest. If you get set in them, and what the flow and implications could be.
Yeah, I mean, in the wider uranium market, it's bizarre. There's a lot of bizarre things about uranium and the dynamics we currently see with financial players in this market. It's kind of bizarre to think that the overhang over a commodity market would be the thinking that a physical trust, like it's a dynamic that only is kind of possible right now in uranium. You're not going to see it in many other markets when the physical trust is big in the scale of things, right? It's a US $5-ish billion vehicle. So yeah, you put that aside because we thought in May they raised this money, it's all good. But now, mid-June, we see $100 million raising kind of hit the boards Sunday into Monday, and then it's upsized and being done at a premium to NAV as well as to the last close, a narrow one, but still a premium. And the uranium spot price flew. So it was the biggest run in like years, like 1 day jump that we'd seen. And it's kind of an obvious outcome, right? When SPUT, is going to use this cash to go into the spot market. The spot market we know is by and large financial players and traders and these sorts. They're trying to get in front of the train and buy it before SPUT can do it. So,
but Sprott themselves are disciplined, like in buying the pounds. They're not gonna exercise the amount of, I suppose, ill discipline that we saw in that single day in the spot market on the spot price. So that
and
was
it's
certainly
hard to
front
be
runners.
disciplined, right? Because this is a thinly traded. You see lots of £100,000 here and there, a few trades a week type of thing. Like they did buying back in 23 over like a 5-month period, and they bought like £1.5-ish million, and that helped drive the uranium price from 60-ish bucks a pound up to like 90 bucks a pound. So completely agree. Like that, they are not the same as like the traders in the market. They're not as kind of short termed in a sense. They're putting it in a pile and they kind of think about the way they go about it. But
that money is earmarked to buy pounds now. That $200 million bucks.
Yeah.
Earmarked to buy pounds.
And yeah, that gets you excited if you're a trader, I suppose, is another way of looking at it. And to go back to the narrative framing, the narrative has quickly flipped from being quite a depressive narrative in the space to like SPUT is good to buy pounds. You've got these RFPs, these requests for proposals coming on the back of the European summer. I know what you're thinking, but that is what people are saying out there. You got big tech, bullish, supportive of the whole thing. You've got all these new reactor announcements from India to the Czech Republic to all over the world. You've got the uncertainty around Liberation Day kind of waning, supply still not coming online. Like you can bend all the facts and figures, and all of a sudden you've got a awesome narrative to wrap around it. And
narrative always follows price, mate.
They work in tandem. They work hand in hand.
Yeah.
And a kind of good sales pitch goes a long way, right? So all of a sudden, SPUT is trading at a discount because for a couple of reasons. They haven't actually issued the new shares. So if you're looking on the SPUT website, you'll see that hasn't actually changed just yet. That'll happen on the 20th of June, and the spot price jumps. So it looks like they're in a 5, 6, 7% discount already.
I think that discount is structural. Like even when they did the $25 million placement, they didn't then trade above NAV post doing that. And here again, I don't think you're going to see.
And they're always like ish going to trade at a discount. Structural to your point because of the fees embedded in the
there's certainly been periods in the past historically when there's enough like retail sentiment that has facilitated SPUT to trade at a premium, and that's why they've accumulated the amount of pounds that they have over time.
Yeah.
But that stopped a while ago. This upsizing, JD, thoughts?
Mate, a lot of thoughts on this, right? So if if you're an insto investor in the space and you sort of catch wind that they're going to do like a decent raising, 100 million
For SPUT.
for SPUT, particularly if you're an insto who's long uranium equities, you know it's on. Like it's so on when you catch wind of this. This was done through Canaccord, as people would have read, and you know the equities are just going to rip and the sentiment is going to change if you catch wind of this. And you also think, particularly in Australia here, where there's such high short interests currently in the names. Like those come off a little bit, but Boss still at 18% plus, Paladin like 15-16% short interest. There is an opportunity here.
Isn't that crazy? So the uranium juniors, like I look at the equities and they are undoubtedly, they trade as high beta to the uranium spot price. And
Explain high beta just real quick for.
High beta is just like, a 1% move in the uranium spot price. You'll get a larger than 1% move on average in the uranium junior equities to the spot price, right? Not the term price. The juniors trade as high beta to the spot price, and the spot price is such a thin market, so the financial players can squeeze that spot price via SPUT, but they're getting paid in the equities, right? That's the trade. In fact, the trade was to be set in the equities before SPUT launched that placement. And if you were paying attention, those equities ripped a day before SPUT launched that placement. That news almost certainly, fizzled out there and drifted out into the financial world, and funds got set in the equities, and then they bid like crazy into the SPUT placement, knowing that you get the high beta rip that comes because spot price is certainly going higher. This is like a textbook squeeze executed to perfection when you've got high short interest in those equities.
And it's the difference between the retail component and the instos as well that can bid into the Canaccord, and they can really push that. They call their good friends at Canaccord and they say, can we get a good bit of this? And hence upsize from 100 million to 200 million. The thing just flies.
Well, that's the interesting thing, right? The winners of this trade are the instos, not retail, but those instos, they need to lock in their wins. What do they need? They need to do. They need to sell eventually their equities, and they probably need retail mania to return to lock in those gains. So I think if retail kind of wraps around this and gets excited and buys the U equities, like that's. You're locking in the gains for the guys that got set on the raise.
The retail guys will still feel like they've had an awesome win, and it might be back to previous levels for some. But if you look back over the last year, most of these charts have gone up and to the right now after, or perhaps even less than that, after having a bit of a brutal year before that.
Well, so isn't that kind of curious, right? Because you talked all the positive like market thematic stuff, and the narrative kind of I think gets wrapped around spot price, and spot price is thin and manipulated, yada yada. But without SPUT, without SPUT, where's uranium right now? Where's the uranium sector?
Like I said, it's a bizarre market. Yeah. It's a truly wacky and kind of perplexing market, and so much of this news just relies on a physical trust, which is not related to the fundamentals. Like it tries to piggyback off the fundamentals, but it doesn't.
So what do you think of this $200 million? What's it gonna like impact is this gonna have in the spot market?
I mean, just looking at what you can kind of buy with it is interesting. Like you can get about £2.5 million ish. Like we said before, they've got a bit over 66 for context. And if you look at 2024 in the spot market, we saw a bit under £50 million trade. Now this is the spot market again, so this could be the same pounds going back and forth a couple times between various traders and the like. So it's hard to get a grasp, but yeah, we saw the spot price jump up. So it'll be interesting to see over what time horizon SPUT use the cash and invest it. And if we see sort of bigger volumes start to go through. But yeah, like we sort of said, that earlier time frame in 2023, the numbers we gave to what pushed the spot price up quite dramatically. Yeah, I'm sure that's what a lot of brokers will kind of push to now and say, hey, look what happened last time. Get on board. Here's a good trading opportunity. But I don't know how you can, with any real confidence, wrap numbers around it. Like, yeah, you've got a buyer who looks by all accounts like they will go and buy pounds, but people that make predictions of it's going to be here by the end of the year kind of I scratch my head.
We saw a similar sort of thing play out, like not all that long ago. To be fair, like remember the start of 2024, and uranium was flying, and SPUT was buying pounds, and then all of the hype kind of fizzled out over.
It's short-term stuff, right?
Well, that's
This is
because
short-term.
the real demand is taken longer.
Things take time, right?
This is financial demand that's moving a thinly traded spot market that gets the equities to respond pretty sharply, and people are making very handsome profits out of this trade. Is it a true reflection of future earnings growth? That's the question mark.
Yeah. I mean, and you'd ask a sort of person that makes the pitch saying, look at what happened last time. What happened after SPUT stopped buying the pounds? It just peeled off. So it depends what your time horizon is when you look at this. And your point on the earnings potential of the companies is really interesting, because if you look at some of the names in the ASX now and you try and back out a uranium price and you use kind of middle of the sort of road numbers on mining assumptions and these sorts of things, and you let the sensitivity be, or the variable that moves be the uranium price, I feel like you're getting a price backed out that's well over $100. Like it's you look at the market caps of some of these businesses and the mine lives that they've produced and the mining costs that they've kind of indicated to and all these sorts of things, and you try and back solve. You might have expectations on them perhaps being able to extend the mine life or find new pockets and at a higher grade and all these sorts of things. But there still needs to be a bit of back solving to be done, or you're just
You're
extremely
saying you
bullish.
still use DCFs to value these companies, mate? You're living in the
Multiples, mate. Multiples.
You're living in the old world. We don't need those things anymore. They're ancient. Yeah, no, I see what you mean, and that's the overarching question, especially if a lot of the price action is driven by short squeeze. That's not a reflection of fundamentals. Although, we hear secondhand that the term pricing is notching up pretty steadily at a decent tick. So that's the reflection of earnings growth is
That's what's to focus on.
Term price. But at the end of the day, these equities move to the tune spot.
Yeah.
And SPUT is influencing SPUT.
Yeah. If you're in it for the long term, keep a good eye on what those sort of term contract numbers. You start to see anything kind of come out after the European summer, like we always hear, mate.
Which European summer? This one coming up, or the one before that, or the one before that?
Not get too skeptical.
Yeah. Okay, mate. Well, talking about uranium, it's got me thinking about how mines are powered, and most importantly, how they should be powered.
So you're thinking about how mines are powered today and how they might be powered in the future?
Mate, I am. And every time I end up thinking about cross-boundary energy.
Cross-boundary energy. Okay, tell me why.
They are the first name that comes to mind when I think of de-risked financing solutions, JD. Hybrid power stations you can rely on. Solutions that can save the miners cash.
Okay, mate, you've got me interested. It's pretty amazing as well. So not just power supply, we're talking fully financed turnkey energy solutions.
Zero capex, JD. Zero capex. Cheaper OPEX, less stress while you build your project. Where do I sign?
What about does it matter where my project is?
It does not matter.
Doesn't matter.
Doesn't matter, mate. You could be in WA if you wanted to, but you could also be in Madagascar. You could be in Sierra Leone. It truly does not matter. Cross boundary energy will go anywhere.
All right, mate. I'm on board. If you are after a hybrid power station that de-risks your project and saves you money, sounds like I should just call Cross Boundary Energy.
Reliable, affordable, clean energy, customized for your mine. Go Cross Boundary Energy.
Alrighty.
Jonas.
New World Resources. We've got to talk a bit about these ones, mate. There's been some drama.
There has been indeed. I've been getting in the weeds a little bit the last few minutes.
M&A. I thought you might have been, mate. May 21st, New World enters a scheme with Central Asian Metals, who we'll also call CAML. Now, that came out with an agreement for CAML,
Camel,
the mighty Camel, to buy New World at 5 cents a share, giving them a rough valuation at $185 million.
I think it was like a 96% premium to last.
They've been trading in the twos before that.
Big premium. Yeah, great outcome for New World shareholders. And on top of that, New World's currently in a trading halt right now. That trading halt references a bump in consideration on its way for shareholders. JD, those lucky shareholders. But why the increase? Wasn't it already a giant premium?
Mate, they are licking their lips, right? So we see that announcement, and then we see a change in substantial come out, right? Kintera Capital. So these guys have emerged as a 12% shareholder, and they've paid up at a bit over 5 cents a share on average.
They bought in the high fours, and you can see that the highest price they've paid so far, 5.1 cents a share.
Yeah, and the quick 101 on Kintera, these are Canada-based private equity group. So they've got a mandate for critical minerals projects as well as kind of related infrastructure. They previously actually wrapped up Southwest Critical Minerals, and this one's particularly interesting because they were the owners of the Pumpkin Hollow project in Nevada as well, copper project, US $128 million. So it's a very similar style of project in a sense, you know.
I can try and piece together what's going on here and what's happened. So Camel has a matching right. So if Kintera was buying stock on market all the way up to 5.1 cents, then maybe Kintera is prepared to lob a bid for 100% of New World themselves for, say, call it 5.2 cents or higher. You can't make a takeover offer at a lower price than you've bought shares in the last 4 months, so you know any offer is going to be, you know, north of that last price they've paid. And Camel, they've signed this scheme implementation deed with that matching right. Now, I don't actually think Kintera has submitted a bid yet. I think the flagged increase in consideration from Camel is actually just preemptive. They're trying to, you know, get on top of this before there's actually a competing bid in place. But this is still awesome. You know, there's live bidding effectively happening out here in the open, all to the benefit of the New World shareholders. That 12% stake to Kintera right now is very strategic. I hear that they're trying to get their hands on 19.9%. And the fact that Kintera is freely buying shares on market here tells me a very important piece of information, JD.
What's that, mate?
I want to draw your attention first to this quote in the New World announcement the day the deal with Camel was announced. It says, the board of New World has entered into this transaction following the completion of a highly competitive financing and strategic partnering process, during which the company attracted strong interest from multiple tier one counterparties, including precious metal streamers, specialist mine financiers, and strategic partners. Notwithstanding the compelling proposals received as part of that process, the board, in consultation with its advisors, carefully assessed the valuation, funding, timing, and execution certainty of the transaction compared with all available alternatives. Now, that there tells me two things. One, a process has clearly been run.
Mm-hmm.
Two, from that wording, I get the impression the bid from Camel wasn't the highest bid in that process. They're saying they weighed up all of these different things. So to me, it comes across as the most certain, like the most execution certainty. But I don't think it was the highest price that they received. And so now we know that New World ran a competitive process because they tell that. Well, when you run a process, what you do is you have the participants in that process that want access to your data room. They've got to sign a confidentiality agreement or a CA. Those CAs include customary standstill agreements if you're a public company. And the standstill agreement prevents the participant from buying any stock in New World on market for a period of time. Call it 12 to 24 months is kind of standard, but you're not allowed to buy any more shares. It stands still. You're stuck at whatever you own at that point in time. And you can see in the scheme implementation deed that Camel executed, that was signed on the 20th of December. So that process is being run. CA signed 20th of December.
It's a Christmas present.
Mate, nasty DD over the Christmas period. But okay, so this, that's when the strategic process is being run. We can introduce that. So if Kintera is freely buying stock on market, what that tells me is that they weren't a part of that formal process. They didn't sign a CA. Importantly, there's no standstill preventing them from buying stock right now. They're buying stock without having done due diligence. They haven't been in the data room. They're coming in hot. This is a rare sight.
That's pretty fascinating. And we know that they're a relatively recent PE group, and this second fund hadn't even been finalised yet. Obviously, they had their first fund, which was finalised late 23, but they hadn't put the final touches on Fund 2, which is what they have bought the stock in at that date yet either. So
it's so interesting, right? Like you've got I mean, they're prepared to write this check, well, for at least 19.9%, not having had access to the data. Maybe they've got synergies, and so that's letting them kind of bid up confidently on the publicly available information. And already you're getting the camel kind of just lifting consideration in preparation to be like, hey, we're gonna wait. This is ours, not yours. Go away. So
Yeah.
I hope it gets juicy. I hope it gets interesting. I hope shareholders just have a tremendous win here. Because this stuff just gets you excited.
It's awesome. Yeah, I think there's more to be kind of said. Maybe even like a whole episode needs to be had on mining private equity. I know we've sort of spoken about it a bunch, but yeah, I'm not totally convinced it's the right approach. But we do keep seeing a lot of these funds pop up, particularly like North American oriented, because the endowments and stuff understand private equity, not mining, but they understand private equity, and it's something they can allocate to. So yeah, these guys, like I said, just wrapped up another US $1 billion. They came from another mining private equity Canadian group as well and started this just recently. So yeah, there's something more to be said there, as well as the fact that the copper names are just disappearing off the ASX.
The juniors in
Yeah.
particular.
Yeah.
Yeah.
And there's not that many seniors either. So
Yeah.
Mac, Underbeard, Xanadu, who we've spoken about recently, New World here, like
Disappearing.
Rex last year. A bunch of them. It's
And yet there's new entrants coming on too. I don't know if you've noticed it. Barry Marker debuted.
yeah,
on
and
ASX
they did
recently.
a raising too, and
Yeah.
obviously we saw Capstone come and
Yeah.
list a bit down here.
Although Barry Marker might be disappearing soon too.
We'll see.
I think it's a takeover target. So.
Yeah,
Yeah.
I think there's a bit to be seen there.
Yeah.
All right, mate. Underground mining, commodities like copper, zinc, silver, all vital for our future. It's the type of project, in this case at New World, that is only made possible by ground support. And when I think ground support, I think Sandvik ground support. And I want to share some more wise words from the man who has led Sandvik ground support for nearly 20 years. Here is Derek Hurd, Money Miners.
Had 4 years in Mount Isa with work. It was a company called A&I back then. I started as the R&D engineer
Yeah.
back then.
This is what ultimately became Sandvik Ground Support.
Yeah, correct.
Yeah,
So the A&I business got bought by the DSI business, and that time the DSI business was Dividag, and that's Dividag Systems International. That's what the DSI.
Dividag.
Yeah,
Wow,
exactly.
what a name.
So DSI actually goes back to like the mid 1800s. I
Yeah,
read, or
absolutely. Back
German firm as well.
Yeah, exactly.
Strong lineage.
Yeah,
yeah.
so like 1865, I think it was.
And
actually.
so you studied engineering, mechanical engineering before?
Yeah, correct. So I'm a mechanical engineer, so through Newcastle University, but pretty quickly realised there's not too many people that stay true engineers, and went off and did a business degree as well. So I had a career through the business. Had started as an R&D engineer, moved into a sales role, and then sort of a bigger sales role, and went to Mount Isa and lived up there for 4 years and managed that region, and then came back and started managing the export business, and then sort of the national business, and then became sort of what they called a business unit manager, and then progressed into the CEO role.
Go Sandvik Ground Support.
All right, mate. Last bit of chatter for today. This is an interesting one. Black Cat.
Tell me what you've uncovered.
So Black Cat have come up with these strategy names in past, and they crack me up. I love them. No knock on them. They're hilarious, but they are, to the point. They get your attention. So the previous one they had was more gold sooner. It's effective. There's no confusion about it. You know what they want. But they came out with an announcement earlier this week, and they've added to it. So more gold sooner to be held longer is the new strategy name. And I don't think you need a marketing professional to tell you that doesn't roll off the tongue as perhaps easy as it could have. But
No, man. I reckon you couldn't have asked ChatGPT for a more succinct, like more gold sooner to be held longer. I get your strategy in 6 words. Like,
yeah, that's it. They've
you
nailed it.
Don't have to read it.
in as little words as possible. So credit to them for that. And we're talking about it. We're talking about it because the strategy itself is interesting. So
What are they doing?
goldies wanting to hold more of their liquid assets in the form of gold bullion,
Right.
as opposed to cash. And I
That's
think
what Black Cat's saying. They're keen to.
Yeah,
They've
and-
already got $24 million worth of bullion.
Yeah.
They want to keep as much bullion as possible and only sell what they need to.
Yeah, and in their case, they've sort of given it a buffer, like a number, 20 million equivalent. But I think it's worth discussing. I think it's a really interesting strategy that they're doing, and there's a few different features of it that need to be discussed, right? So there's something to be said for the tax implications of this, because gold, when you're a gold miner that you haven't yet sold, is unrealized revenue, right?
Yeah, yeah, yeah. In many jurisdictions, income tax is only triggered when the revenue is realized. In Australia, that unsold gold is inventory, not revenue on your balance sheet. Therefore, no assessable income is recognised until that sale actually occurs, which means a natural deferral of your income tax. That has an impact on your cash flow. For all
Metrics as
intents and
well.
purposes. So the gold that stays on the miner's balance sheet, here's a bit of a catch, though. It'll be valued typically at the lower of cost price and market value, and because the market value of gold typically tends to go up over time, in reality, it's held on your balance sheet at cost price. So in a rising gold market, like these miners that choose to do this from time to time, they will avoid recognizing a high book profit on that. They just keep it on their balance sheet at cost.
One for the accountants out there.
I don't mind it though. Like, I don't mind the strategy.
I don't mind it at all, right? I think if you're of the philosophy that gold is money, which clearly a lot of your investor base will be kind of partial to, given you're investing in a gold mining company, I don't think it's too much of a stretch to think that, then it makes perfect sense. It's kind of interesting you market in dollars, but you kind of got to market in something, right? But it makes total sense if you are wanting to compete against inflation and all these sorts of things.
Well, the market
I kind of like it.
The market would hate you for just like building up cash only on your balance sheet and having no plans to distribute that to shareholders, or no way to reinvest it or organically. Like, I do think the market would prefer to see reinvestment for growth with the proceeds of the profits of a gold miner, for sure, or distributions to shareholders, for sure. But if you've got something left over at the end of that and you decide to keep it in gold, or you've got your available liquidity in gold, I don't hate it. I don't think the market is going to love it or value it in general, though.
Yeah.
And there's a couple of there's one big precedent I can point to that is a very peculiar case, and maybe not the best precedent to talk about, JD.
Please.
Do you know who I'm talking about?
I do. One of our favourite companies.
Yeah, it's actually two companies, Tribune and Rand. So these are the JV partners at East Kundana, joint venture to Evolution Mining. Previously, it was Northern Star, the JV partners. Now Tribune, if you look at their books, they equity account Rand. So all you got to look at is the inventories on the balance sheet of Tribune. As at 31 December, in their accounts, you can see gold on hand at cost, 177 million of gold bullion. But it's valued at cost, JD, and neither Tribune nor Rand will tell you anywhere how many ounces they actually have of bullion. You're just left with that number trying to figure it out. But if you do your homework,
the Perth Mint's just their fault.
Mate, if
you can trust it.
I haven't done this homework myself, but I trust the people that did do this homework. Go through the history, and you can deduce what's been produced and what's been sold over time, and you can back out that Tribune and Rand collectively have about 130,000 ounces of gold in the account at the Perth Mint. 130,000 ounces of gold, while it might be valued on the books at $177 million, is actually worth $680 million at current prices. That's a staggering amount of bullion, and I'm pretty sure that this is the single largest account of gold on hand at the Perth Mint. Crazy. And what gets weirder, mate, if you just add the market caps of Rand and Tribune together, you'll get $370 million. Now that's like half the value of the gold alone that they have on hand, not least of which they still clearly have an economic interest in a joint venture that is still producing a lot more gold that should be worth a fair bit of money. So this is like as negative EV as they get. Granted, you can't quite figure out when you're going to get paid here, because because there's kind of a complicating shareholder dynamic and structure, and a few obstacles in the way to an outcome if you're an activist.
One or two.
One or two. Fascinating example nonetheless, but
Really
kind of admire.
interesting.
It's a ballsy strategy. Kind of admire the strategy to do it and to not really give a crap about what people think and just accumulate gold. I hope the mint still has that gold.
Yeah, I'd probably diversify the mints that I hold the bars with.
It's a lot of faith in the mint.
It is a tremendous amount of faith in the Perth mint. So yeah, I think it's really interesting. If we go back to the strategy again, looking at like parallels, we've seen this in uranium, but it's kind of weird. Like you don't see it in any other, and it just wouldn't really be okay in any other commodities. So yeah.
Why is that? Is it because like obviously the dollar is clearly and the value that erodes over time, and gold is seen as like a clear and proven way of circumnavigating that, whereas other commodities aren't as inflation resistant.
Yeah, I mean, a lot of people point to commodities being the good inflation hedge, but not all commodities are equal, right? So
yeah,
you wouldn't be chuffed if like a zinc producer is going to start doing this, but gold, maybe it's okay given the many thousand-year track record. So yeah, I think they could have put a slightly better chart than just going back 20 years to prove their point, but I think the strategy is interesting nevertheless, and I don't mind it.
What do you think, money miners?
Let us know.
Hoard gold or hoard cash or none of the above?
Or what else? Alrighty, mate. Let's thank our wicked partners for today's episode. Mineral Mining Services, Grounded, Sandvik Ground Support, Hadrill, and Cross Boundary Energy.
Hoodaroo.
Hoodaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.